$1.2 trillion in a single quarter. Dealmaking is officially back. Geopolitical turbulence doesn't even matter anymore.
Oh, come on. Deal volume is actually down 17%. You're just blinded by the mega caps.
When the mega cap is SpaceX throwing $250 billion at xAI, yeah, I'm blinded. It's a masterpiece.
$250 billion. I pulled the filings, and the financing structure is completely absurd.
Which means you secretly love it. We need to talk about how they actually pulled this off. The rundown. $14.2 billion to buy back half of your own factory. Intel is officially running a corporate pawn shop.
They needed the liquidity back then, Nate. But yes, buying back that 49% stake in the Island Fab joint venture is a massive flex, or a massive admission of terrible timing.
Speaking of flexes, Franklin Templeton is buying 250 Digital, and they are settling the transaction partially on-chain.
Oh, come on. That is purely a PR stunt.
It is a landmark deal.
Landmark for the marketing department, maybe. Look at the actual mechanics. Partially settled on-chain usually just means someone sent a test transaction of a stablecoin before wiring the real fiat through JP Morgan. I need to see the actual ledger before I buy that narrative.
You are so cynical. Traditional finance is actually trying to use the rails.
I will believe it when Goldman Sachs puts an M&A fee on a blockchain. Which reminds me, Goldman just finalized buying Innovator Capital Management. $31 billion in assets under supervision added to their portfolio, just like that.
Bank M&A is officially back. Deloitte is calling 2026 a throttle-up moment after that 42.5% surge in banking deals last year. People are tired of waiting for perfect macro conditions. They are just pushing through the geopolitical turbulence.
Well, they are pushing through larger checks, but not more deals. Volume is actually down 17% in Q1.
Wait, really? Because the headline number is huge.
Exactly. Global deal value hit a record $1.2 trillion, up 26% year over year. But the actual number of transactions dropped. It is purely a mega cap distortion. Sullivan and Cromwell topped the league tables, advising on over $540 billion alone, $500 billion for one law firm.
That is a staggering amount of billable hours. Let me throw some gossip at you before we move on. Estee Lauder and Puig reportedly deep in talks for a massive tie-up, mostly stock-based.
Stock-based makes total sense there. Preserve the cash, merge the operations. Meanwhile, Gilead is actually sweating. They just had to extend the expiration date for their RSLX tender offer. The clock is ticking and investors are getting nervous.
Keep an eye on Apollo tomorrow, too. Their funds are about to close on Gatehouse Living from Gatehouse Bank in the UK. And we might get regulatory updates on Uber buying Blacklane. Uber really wants that luxury chauffeur footprint.
They want the high-margin footprint, but none of those deals explain that $1.2 trillion Q1 number. You cannot hit a record quarter just by selling high-end makeup and luxury car rides.
No, you hit it by letting Elon Musk negotiate with himself. Which brings us to the $250 billion AI elephant in the room. The big one. $250 billion. I keep saying it out loud and it still sounds like a fake number you make up in a business school case study.
It sounds fake because the math is essentially Elon Musk moving monopoly money from his left pocket to his right pocket. But it is the reason Q1 global deal value just hit $1.2 trillion. Trillion with a T, up 26% year over year.
Which is wild when you look at the actual transaction volume.
Exactly. Volume dropped 17%. We are seeing significantly fewer deals, but the ones getting inked are absolute monsters. SpaceX swallowing xAI is the apex predator of this new mega cap era.
I will defend this deal. I actually love the strategy here. Look at what SpaceX is doing long term. They need massive compute for Starshield, for orbital logistics, and whatever the Mars colonization timeline is this week. Consolidating xAI into SpaceX gives them a dedicated captive brain trust. It makes total narrative sense.
You cannot be serious right now.
I am completely serious. It is vertical integration.
It is a corporate governance nightmare. Nate, SpaceX is a heavily regulated defense contractor that launches government satellites. xAI is a consumer-facing AI startup that trains large language models on internet memes. You are telling me a $250 billion valuation is justified by orbital logistics? Show me the revenue multiples, please. I dare you.
Okay, the multiples are entirely imaginary. I know I sound like a banker trying to justify a pitch deck, but you are missing the forest for the footnotes. It is priced on future compute dominance. The market is telling us they do not care about governance right now. They care about raw scale.
The lawyers definitely care about governance. Sullivan and Cromwell just had the quarter of the century. They topped the rankings by advising on over $540 billion in announced transactions in Q1. Half of those billable hours were probably just untangling the cross-ownership structures of the Musk empire.
My old managing directors are weeping into their keyboards, wishing they were on that fee sheet. But the xAI deal proves a bigger point. Dealmakers are completely ignoring geopolitical turbulence. We have ongoing trade wars, we have supply chain chaos, and nobody is pausing.
The industry dealmakers are telling us exactly that. Companies are tired of waiting for perfect macroeconomic conditions. The global volatility is just the baseline now. If you want a target, you buy it today.
Even if that target is something you already owned and sold.
Oh, are we talking about Intel dropping $14.2 billion to buy back half of its own island fab?
We are, because someone in their finance department is doing Olympic-level gymnastics, and I need you to explain the math to me. Voices. Deloitte just put out a note calling 2026 a, quote, throttle up moment for bank M&A.
Throttle up? Are they piloting a fighter jet or forecasting deal flow?
They're looking at the tape, Maya. Bank deal volumes surged 42.5% last year, and you have industry deal makers saying they're absolutely done waiting for perfect macro conditions. They're doing deals despite the geopolitical mess. Look at Goldman. They just finalized the Innovator Capital Management acquisition and tacked on $31 billion in assets just like that.
I read the Deloitte note, and I think they're high on their own supply. Look at the actual Q1 data. Yes, global deal value hit a record $1.2 trillion, but transaction volume actually dropped 17% year over year. Deal counts are falling off a cliff.
Because the deals are massive. SpaceX dropping $250 billion on xAI completely skews your math. The big guys are tired of sitting on their hands. They're pushing through the turbulence.
Pushing through or just ignoring risk? You have Sullivan and Cromwell advising on over $540 billion in Q1 alone. That's just a handful of mega cap transactions propping up the entire market narrative. The rest of the market is completely stalled out.
I disagree. Buyers are just getting creative. Did you see the Franklin Templeton deal? They're acquiring a crypto firm called 250 Digital, and they settled part of the transaction on-chain.
Wait, really? An actual corporate acquisition settled on a blockchain?
On-chain. The bankers literally had to calculate gas fees for a closing wire.
Okay, I actually love that. Someone in compliance definitely lost their hair over the weekend.
Guaranteed. Speaking of losing hair, the team over at Gilead just had to push back the expiration on their ARCLX tender offer.
The clock is definitely ticking on that one. But honestly, I'm way more interested in the gossip coming out of the beauty aisle right now.
You mean the Estee Lauder and Pig rumors? Because if that massive stock-based tie-up actually happens, it's going to completely rewrite the luxury retail map. Spill the tea. Okay, but tell me, you saw the chatter about Estee Lauder and Puig?
I saw it, and I immediately checked the Puig chart. A predominantly stock-based tie-up. Puig literally just went public.
Exactly. The ink on their IPO prospectus is barely dry. But you have to admit, bringing those two family beauty dynasties together is prime HBO drama. I am here for it.
You just love the soap opera. I look at Estee Lauder's stock performance over the last 2 years and wonder why on earth the Puig family would accept that paper.
Oh, come on. It is a massive premium play. Plus, industry deal makers are explicitly saying they are done waiting for perfect macro conditions. People are just pushing through the geopolitical turbulence to get things done.
Right, because bankers never have a vested interest in forcing deals through.
Deloitte is calling 2026 a throttle up moment for bank M&A. We saw a 42.5% surge last year. The animal spirits are back.
I will believe the animal spirits are back when Gilead can actually close a simple tender offer.
Oof, the ARCLX deal?
Yes, They were just forced to extend the expiration date again. The clock is ticking, investors are sweating, and no one is answering my emails about what exactly is buried in the regulatory filings to cause this delay.
See, that is the difference between us. You see a delayed tender offer and assume a footnote conspiracy. I see a minor speed bump while the rest of the market is throwing around trillions.
Trillions is not an exaggeration this quarter.
Not even close. Speaking of throwing around insane amounts of money, we have to talk about Elon.
$250 billion.
We are breaking down the math on the SpaceX and xAI mega deal right after this. Tomorrow's radar. Tomorrow, I'm watching Apollo. They're finally closing the Gatehouse Living buyout from Gatehouse Bank. Deloitte just called 2026 a throttle-up moment for bank M&A.
Wait, Apollo buying a UK real estate portfolio from a bank isn't a bank merger, Nate. That's just private equity picking meat off the bones.
Okay, fair. You want a real corporate tie-up? Watch the tape tomorrow for Uber and Blacklane.
The chauffeur service? Are we really calling Uber a luxury brand now?
They're trying. But forget Uber, I've got better gossip. Estee Lauder and Puig are apparently deep in talks.
Oh, come on. Puig just went public. Now they want to sell?
Massive tie-up, mostly stock.
A stock deal in cosmetics right now? Good luck getting that exchange ratio to stick. I need to see an SEC filing before I buy that narrative.
You hate fun. Fine, keep an eye on Gilead instead. They just delayed the Arkelix tender offer deadline again.
The clock is definitely ticking there. We'll see what actually hits the terminal at 6 a.m. tomorrow.